Yeah, so Ethereum has had an amazing move. I mean, if you think about where it bottomed out, it kind of bottomed out around $830, $835, and it's now hitting over 1700. So number one, that's an amazing move to the upside. I will say it's hitting some resistance, and I'll show my chart here. So this is your big level right here. See this pivot low right here, and all these little kind of minor ticks of that. And look at price. Price is now testing this. Now, again, right now it's fractionally above. I want to see where that closes in the near term. If it can get above, you actually do have a little bit more upside here. And again, I would generally say if Bitcoin has more upside, generally Ethereum would. Ethereum has actually led the move even ahead of Bitcoin in this scenario. But my general target is short term. We're at resistance around 17 and a quarter. If we continue up, I think 2000 is your next spot. So again, I can draw a little trend line right in there. I do think that at some point we're going to see another pullback or dip, very possibly even make new lows on it. So again, I do caution people that this is a bear market right now. Bear market rallies can be very alluring. They try to lure you in. They try to get you to buy at these high levels. I think the reward is already mostly out of this trade right now. I'd be very cautious as, again, you're almost up 100% off of the lows. The other thing to kind of keep in mind, if we got a ridiculously strong move, this also has to be noted from the all-time highs down here to here. So again, let's just say we do take out 2000. Ethereum, awesome move. I still, again, would be very nervous about maybe in a worst case scenario, getting back to this area down here. But again, Ethereum has proven itself. There's so much built on the Ethereum network that I think as on pullbacks, especially if you ever get down here, the normal case for most people is to get really scared, get really worried. You want to kind of take that mindset and say, remember, if I get like that, that's usually where you want to buy. And you could just look at the emotion of it, right? When we were at the highs on Ethereum, highs on Bitcoin, everyone wanted to buy. That was the time to sell. So start paying attention to that psychological aspect of when everyone else is freaking out, that's when you want to buy. And think about, by the way, think about when Ethereum bottomed, what was going on? Celsius, Voyager. I mean, all of these things were going on that were very scary. I mean, people getting their money locked up in these firms, losing their money, but that was the time to buy. Buy fear, sell greed. But I think there's so much excitement building. And I think as you see price going up, what it does is that lures in additional buyers that were kind of hesitant. So you're seeing a lot more individuals buying in. My guess is, and this is something just to pay attention to, is if Ethereum continues to rally into the merge, look to see a sell the news event. And I know that sounds kind of weird, but a lot of times you'll see big money know that the smaller investors will be pushing it up. And just as it gets to that merge, they get that last buyer push and they're just dumping into it. And you'll see price actually come off of that. So by no means, again, the worst thing I think, if price rallies into the merge, don't be buying right at the merge. Don't be paying up here. One of my favorite, I hope you don't mind, but one of my favorite aspects for investors to ponder is this. When you go to the mall and let's say you got to buy a pair of jeans. I go to the mall, I see $100 pair of jeans. Okay, they're nice. I don't buy them this time. I come back next week and they're priced at $200. I don't say, oh my goodness, I have to buy 4 pairs of those $200 jeans, right? Instead, I say, I'll just wait for it to go back on sale, right? I'm not going to pay up. That mentality is what you have to translate into trading, right? Think about how traders work, how investors work. They see price going up and they're like, well, now I really have to buy because it's more expensive. Think about it as if you're going to the store and you're looking for sales. That's when you want to buy. So I think, again, in the next bull run, you're talking, probably 150, 200,000. I think for me, the first marker is going to be 100,000 on Bitcoin, but I think you can get through that. I think, again, if you look at the X times, so you went from 20,000, which was the last high in 2017, you did 69,000, almost 70. So at minimum, that's about a 3 times. So I think you kind of map that same thing out. With the right regulation, with big money getting in, it might even be higher than that. With Ethereum, I think 10,000 at minimum. I think maybe even 20. I think 20 could be in the cards. Again, that's longer term view, but I think I love it. I think this is the new frontier, and it's here to stay, just like the internet was. And just to remind people again, .com bubble collapsed, but look, we all use the internet. Our phones are hooked. I mean, it's everywhere. That's what crypto is going to be. That's what the blockchain is going to be. It's just growing. The last thing I'll say on that is, a lot of people always ask, like, why is Bitcoin not behaving with the money printing and the inflation? Why isn't it going up? And I just say, well, remember, people are still discovering what price it should be at. It's the equivalent of a 13-year-old. So it started in 09, it's 2022. Think about a 13-year-old, how rational are they? They're not, they're crazy. They're all over the place, right? That's what Bitcoin is. It's trying to figure itself out. It will eventually mature into gold, which is a much more stable asset that does work inverse to or with inflation, or essentially goes up with inflation, but you have to let it mature into that. I look back at myself in my early years. I was doing exactly what a lot of people are doing. I was buying hype. I was listening to all the craziness on Twitter. I mean, we didn't have Twitter back then, but the equivalent of that, Yahoo message boards for people that were back around there. And again, if I could do it all over, number one, I would learn first. And number two, I would start with as little money as I could, because inevitably as a new investor or trader, you're going to make mistakes, which in this game, it costs you money. So the less money you have, the better. A lot of people think these people that come in with $1 million, they're just going to lose their $1 million. When I first started trading, I had $10,000 and I literally worked 3 side jobs because I kept on losing most of my money. And I just was like replenishing my trading account constantly. Finally, I started to learn and study the charts, and that's really where things turned around for me. But it took a long, long time. Go small, learn. Remember, and this is a general rule, is that the market, doesn't matter if it's crypto or stocks or commodities, the market will make you pay more for an education versus you going and finding some good educational material out there. I probably paid hundreds. I probably paid the equivalent of a brain surgeon, like what someone would have to do to learn. Granted, now I'm okay, but if I could do it over, I would be like, all right, let's go learn first and then try to invest. And this is, and I do have a HODL portfolio that I'm just kind of developing now. So I guess that the answer to that would be, number one, I would focus on the top coins, because my biggest concern about secondary coins and even things like Polkadot, I mean, those are great ones, but I don't know that they're going to be around if we do go significantly lower. I'm pretty sure Bitcoin will, I'm pretty sure Ethereum will. So I would invest that $1,000. I'd probably do like a 65-35 split, 65% in Bitcoin, 35 in Ethereum. Ethereum to me is a little riskier. So it's all about measuring that risk. And then I would keep an eye on the other coins. And if they show me that they can really withstand a crazy bear winter, then I would potentially think about rotating some capital into those. I think just continue to be careful. Remember that the bear markets, they will be alluring. They will make you think it's a new bull run. Follow a trend line, breakout line, something that tells you something versus just kind of going along with the hype of the crowd. And I think just be careful. Conserving capital is always the way to make more money in the long run. If you try to 10 times, 100 times your investment overnight, I've seen most people go broke doing that.